Escrows? Taxes? Insurance? What do I do with it? What are escrows? Let's find out. Hey there, welcome back to another episode of From Contract to Closing with Cheryl. If you watched the previous episode, you know we talked about earnest money deposit and how the title company holds it in their escrow account. They hold it in escrow, in an escrow account or a trust account, in trust for buyer and seller throughout the process. Then it's credited to them on the settlement statement. So that is EMD being held in escrow. But you hear escrow another time during the process. What we're talking about today is escrows for taxes and insurance. And this is going to come up when you start talking about costs. Prepaid interest and tax and insurance escrows are something that's going to come up during the negotiation process. Who's going to pay those? Will the seller pay up to a certain amount towards those and other closing costs? So that's what we're going to talk about today, tax and insurance escrow. Okay, so if you're familiar with your mortgage payment, it's a breakdown of PITI. PI is principal and interest. That's the amount you're actually paying towards the mortgage. TI is taxes and insurance. And again, that's what we're talking about today. Basically, your lender collects taxes and insurance in your payment each month when you send it into them so that they can make that annual payment each year when it comes due. So taxes and insurance, taxes in Florida are due in November. Insurance is due whatever month you closed in. So if you closed in April, your insurance is due in April. Taxes are always due in the state of Florida in November. So the lender is going to pay those out come April and November. Well, how much are they? Okay, we're just going to say for ease this time that your homeowner's insurance is $1,200, gets paid out in April because you closed in April, and your insurance gets paid out in November because that's just how it is, and it's $1,800. So they collect each month 1/12 of that amount. So for taxes, they collect $150 because 150 times 12 is the $1,800. And then each month they collect $100 for your homeowner's insurance included in your payment, so that they're collecting that $1,200 by April to make sure they make that payment for you. So I'm going to show you what I'm talking about. Okay, we have shown here just a very simple layout of a purchase here, and then the payment breakdown over here with that PITI, principal and interest, taxes and insurance. Property address doesn't matter. Loan amount, I'm just going to go with a straight $200,000. Your interest rate on a 30-year mortgage should be a little bit better than 4.25 right now. If it is not, you need to call me, and I need to hook you up with one of my lenders. And let's see, April closing date. I just picked April. The lender will have to make that annual insurance premium payment every April. If your closing is in June, then they will make the payment every June. I just chose that for this example. Property taxes per year, $1,800 a year, which is actually $150 a month if you divide that by 12. And then homeowner's insurance, $1,200 for the year. Again, that's going to be paid every April. It's going to be collected and paid at closing the very first year. And then in your payment each month, they'll collect 1/12 of that, which is $100 a month. And they'll pay it next April. Okay, and then we'll jump over here, principal, interest, taxes, and insurance. This is the breakdown of your total payment for your mortgage. Principal and interest, I got this off a simple amortization calculator. This is the very first payment. As you make payments, and this is very important, as you make additional payments, the second payment, the 40th payment, the 230th payment of the 360 payments that you will make over 30 years, the principal amount will increase and the interest amount will decrease. So if you didn't know that, the very first payment that you make, you will be paying higher interest than any other payment that you make, and you will be paying lower principal than any other payment you will make in the future. Okay, and then what we're talking about today, taxes and insurance. So these are your escrows for taxes and insurance. They're collecting your payment because that's what they do, but they're also collecting your taxes and insurance, holding those in escrow, and then paying those for you when they come due. For example, in April, or in Florida, taxes are due in November. and then the breakdown of your total payment. So in our area, if you purchase a $200,000 house and you get at least a 4.25% interest rate, these taxes and insurance are pretty good estimates, depending on where you purchase, but definitely keep an eye on that. Actually, here's a tip. Definitely keep an eye on that, because if you live in the county, taxes are usually lower than you live in city limits. If you live in the city limits, you can usually count on a few more, a little bit higher taxes, because you do have a few more amenities living in the city. Maybe your garbage is covered, that kind of thing. Personally, I would rather pay county taxes than city taxes, but again, that's personal opinion. And yes, so this is the breakdown. I just wanted to show you again, principal, interest, taxes, and insurance. That's what PITI is, and then what you're paying to the lender. Again, this is the very first payment, and then taxes and insurance each month for 30 years. And keep in mind, those can fluctuate from year to year. So watch out for those tax bills and insurance bills to come in the mail. Keep an eye on it. Now, escrows can change from year to year, because let's face it, your taxes and insurance amount can change from year to year. Keep an eye on your mail in August, actually, and watch for your trim notice, TRIM, trim notice, from the tax collector's office that tells you what your taxes are going to be in November. And then if you closed in April, you can probably expect that March you're going to get a letter from your insurance company stating what your new amount for the coming year is going to be. It's going to renew April 12th or whatever your closing date was, the effective date of that insurance. It's going to renew, and it's going to tell you what that new amount is going to be. Well, if you see that that new amount actually went up to $1,400 from $1,200, guess what? Your lender's also going to see that. And in the next couple of months, your payment's also going to be increased to cover that shortage, because they're only collecting enough to pay $1,200 from you. But now this year, coming year, it's going to be $1,400. So expect that payment to go up, be prepared for it. Or if you see it jump more than $200, say $300 to $600 to $900, yes, I have seen huge jumps like that before. Call around and get different insurance quotes. If you need suggestions, just ask me. I have several in our area. They cover the entire state of Florida. If you are in another state, please ask your favorite real estate agent to give you some recommendations, people they've worked with recently that they know have decent rates. So definitely do that. I actually think everyone should reevaluate their homeowner's insurance about every 2 years. I'll say 2 to 3 years. Take a look at it, make sure it's still reasonable. And again, that directly affects your payment. So you really need to keep an eye on that. So you see, escrows can be really great because the lender is responsible for collecting and paying them. You don't have to worry about it. You will not get a bill in April. You will get a copy of a bill, but the lender's going to pay it. In November, when taxes come due, you will get a copy of the bill. You will not get sent the bill to pay. So your lender's going to take care of this. That's twice a year that you don't have to come up with a big chunk of money. You pay it every month in your mortgage payment, and they take care of it for you, keeping you having insurance and your taxes paid, which is a super important thing. As always, I hope that you have taken away a lot of good information from this. Please subscribe, like, and comment below to let me know what you'd like to hear about next. And join me for the next episode of From Contract to Closing with Cheryl, where we talk about, should I get pre-approved or not? See you there.